It is August 27th. It is a Thursday night. You're probably going to be viewing this on a Friday. And today, after I take you through the account, as always and usual, I want to talk about why I'm pretty bullish, actually, on the underlying economy in the not too distant future. Probably next year or even the year after that. And I'm going to give you my reasons as to why. Mainly for the US, actually, oddly enough, and emerging markets and globally, but US mainly, which sounds strange because US has had such a long and successful run versus the emerging markets, which have been lagging a bit behind, right? But I'm going to see if I can make the case, all right? But let's go into the account. I'm at 124,342. I am not on an all-time high. I had a decent day, maybe yesterday. It's been going up and down a little bit, like 1,000 up, 1,000 down, but no real movement since last time I made a video. So let me quickly take you through the positions. As usual, you can see the symbol here, then the price of the option. The strike price of the option, whether it's a put or a call option, the expiration date, the number of contracts, and whether it's a sell or a put. You can pause the video player at any moment to try to figure out all the relevant information that you might need from these option positions. And on the right is the daily change. You can see we're going into the equities now. So you can see that Apple was actually down about almost $900, and if it wasn't for that, I would actually have a positive day. So this is one of the rare occasions where Apple is actually dragging my account rather than pulling it up. We'll see if that continues. We'll see if it's a trend or just a abnormality. Here are the rest of my positions. You can see the stock symbol that I own, the number of shares, and that will give you all of the information you might need. Of course, a lot of these stocks are counteracted by option plays, so you can't just take them naked and make conclusions right away. Here's the account tab, which you also have to take with a grain of salt for similar reasons. All right, these are the companies by total return and by equity. It's very similar, actually. The top two, Cameco and Apple, total return and equity. It seems like the biggest position that's hitting over its weight is wheat and precious metals. Basically more than double that position. All right, so that's the account. Here is the 1 week performance. I'm sitting at plus 2% on the week, plus 7.9% on the month, 40% on the 3 months, and then 1 year, 56%, which is better than the SPY. Let me see if I can pull up the SPY, which is of course the exchange traded fund that tracks the S&P 500. Here is the week performance, 3.36. Losing on the monthly, but I think it's because Robinhood bugged out on the chart there. 8.51. 3 months, it's 14.83 as per my 40%, so definitely outperforming here. And the 1 year performance is 22 on the S&P. That's the main benchmark that I try to beat, is the S&P 500. I don't think I'm beating the NASDAQ or anything like that, but the standard in investing is the S&P 500, so I really try to beat that. That's my main goal here. All right, back to the daily chart. Oh, it just ticked over. Yep, it's 12 a.m. Okay, so let's talk about why I'm pretty bullish on the economy from here. Even though there's been a lot of negativity, right? Everybody's staying at home. A lot of chaos and misunderstanding of what it all means and what's going to happen. Many industries, of course, are lagging, like hospitality and oil, airlines, etc. even banking, right? Because the rates are low, they're not collecting interests, and for many other reasons, like a lot of the businesses that they've loaned money to are going bankrupt, right? So they're not having a very good time right now for many reasons. And it's a difficult time for the markets, but just like the phoenix, right? Whenever there are a lot of ashes and a new one comes burning through. Okay, that was kind of a horrible analogy. From the ruins of one civilization grows another, right? And there's this kind of creative destruction that happens in the markets. I mean, that's actually what the term is called. If you read economics, you're probably familiar with that term, creative destruction. And this one is not actually any fault of our own. Obviously, we had Mother Nature kind of bestow us with some challenges that we gotta overcome. But nevertheless, there's going to be more adaptive, quicker to act businesses and business leaders that take it upon themselves to change the company and try to make it profitable in these times. So I think that there's going to be a lot of change for the efficient, change for the adaptable, and just thinking about all these. So that's argument number one. Okay, through hard times come good times, and that's just one of the reasons. I mean, another reason is that there's been so much currency, right, US dollars and other currencies around the world, pushed onto the economy, okay, onto the consumer, and also onto businesses and stuff like that. But basically, by pumping these units in there, you make it easier to form capital. Now, all this works given that the value of the dollar is sustained. Okay, obviously, if the value of the dollar is it takes a big hit, then the capital that's formed is not going to be worth as much, and the whole it's a zero-sum game, right? But given that the rest of the world supports the value of the dollar just like it has been for the past however many years, then I would argue there is a higher chance for capital formation, and especially for young and new entrepreneurs to enter the game. They'll have enough capital to start a business. And there's never been an easier time to start a business right now with online, right? You have a huge onslaught of customers that are coming onto the scene because they don't have a choice. They can't go to the store, so they have to shop online. And not only that, but these customers have newly printed money from stimulus checks and all kinds of stuff, from their increased savings rate. The savings rate bumped to like an all-time high in the US in March, April. Up to like 31%. So a lot of debt has been paid off, and some people got scared and started not spending as much. There's been a lot of money saved from from going on vacation and from travel and things like that. That money sitting in the bank. People are wondering what to do with that money. Many of them are putting into their Robinhood account, right? Robinhood accounts have just exploded on the upside, and hence the whole Robinhood effect that many investors are talking about, and you might even hear on financial news. But that helps. I mean, whenever these people put their money in Robinhood, they're giving it to entrepreneurs, right? They're financing companies, publicly traded companies, and that money goes into either more innovation or whatever, financial engineering sometimes, but some of that money trickles into R&D, and it trickles into investment, okay? To purchase more plant and equipment or more R&D, research and development. It goes into purchasing like new properties in order to boost the return for investors. So the money goes somewhere. But not only that, if you look at the stock of Shopify, let me see if I can find it. So I think it's just shop is the symbol. Yeah. Shopify is the online store stock, right? I mean, look at this. Look at this rise, okay? So that definitely means an increase in activity. Here's the March drop, okay? It dropped all the way down to 346. Now it's 1,057, all right? In the past year, it's experienced 160% increase. In the past 5 years, it's 4,000%. And Shopify is kind of the poster child for um, for online business, right? It's like that's what it's built for. It's the platform for people to start online stores and run businesses online, right? This is the new wave of retailers, and a lot of drop shippers, young kids and entrepreneurs are starting businesses on there, like do drop shipping or all kinds of stuff, and it just made it so accessible to the everyday person, and it takes a lot less capital to take a risk. I mean, I'm doing something like that myself. I'm trying to start a product line as we speak. It's not on Shopify, it's a little bit more traditional, but I'm building out a website with some money I put aside, and excuse me for the noise there. I put some money aside and I try to make some investments and see if I can actually start a retail brand of my own. And so, we'll see where it goes. But I don't think I'm the only one. And now here you have, a whole new wave of investors, entrepreneurs with such a small, hurdle to overcome in order to start and get their operations going. And I think that many of them will succeed. Many of them will learn how to grow and make companies bigger. And I really want to make a very strong, unbelievable prediction right now. And that prediction is that Amazon is soon going to have competition. Okay. I think one of those kids, okay, or it doesn't have to be a kid, it can be a grown adult, it can be a 60-year-old. I think one of these people that are starting these stores are going to find out I'm going to have some kind of an edge on Amazon. They're going to find something that Amazon doesn't do, and they're going to start competing with it. Okay, I really do believe that. I think Amazon's going to be dethroned from the retail top, and that new company is going to have its roots now. It's one of these kids or people that are starting their businesses at the bottom of March, right? In April, when they see these opportunities. Someone got fired from their work, someone brilliant, right? Got fired from their work and is working on the company right now and is going to find a way to compete against Amazon. Like I really do believe that. And because there's just such an onslaught of new businesses that are being formed and such a huge boost in investor numbers that I think it's bound to happen. Like the numbers are showing it. And so it'll be really interesting to watch. So that's my prediction. Okay, so I'm bullish in the economy. I think there's going to be a change of, leadership when it comes to the retail space at some point in the not too distant future. And I also think that because of the increase in online retail and things like that, people are going to be going back to traveling. They're going to be wealthier. Oh, and the other thing is, like, because of this kind of forced saving that's going on, many people are starting off of a level of having something, right? Up until this point, many, like I would say more than 50% of people have been living kind of in a state of desperation, okay? Like paycheck to paycheck, struggling to find money to to go by, and never had actually any time to think about, okay, how do I do something different? How do I leverage what I'm doing? How to start something new? How to make more money? Okay, they don't have time for that because they got responsibilities at home. They got to make rent, got to work all day, too tired to do anything, so just chill out on Netflix, right? But now all of you have finished Netflix, right? It's not my joke. Everybody's using it, so I thought I should too. All right, and you're on your way to finishing Hulu as well. Sorry for the noise there. Then you have time to think about productive stuff. Okay, you've worn your mind out from trying to kill it with internet sugar, right? So now you're trying to be a little bit more productive. So I think that there are still people who are struggling, even more so than before, but I think the percentage is smaller, right? Let's say 50% of the people were living paycheck to paycheck and could never lift their head above water. I think now that percentage is probably like 40 or 35, even though that 35, 40% may actually have a harder time, maybe having a harder time than they were before the virus pandemic hit. but because of the circumstance, I think it's opening up opportunities. So I'm looking forward to it. I'm looking forward to it. I'm not saying that there's not going to be any kind of downturn. I still do think that there's got to be something around the election. I mean, I'm not a political person at all, but that thing usually always brings some kind of volatility into play. Personally, don't think that the outcome is very relevant at all as far as the economy goes, as far as the markets go. There might be some kind of change in the rules, but they're not going to be drastic enough to where people can't figure out their way around it. So I don't think that the outcome is going to be very material at all. All right. Well, with that said, I think I'm going to end it right there. I've said my thoughts on the matter. Let me know what you think about it. And if you watched this video all the way through, yes, I'm doing it again. Okay. Type in the comments below the words new gen, like new generation. You know what I mean? Just so I know you watched all the way through and so I know who you are. All right. I'm going to end it right there. Peace out.